Welcome, everyone, to what we're now going to call AMO Weekly, which is a name that we thought we would call this, and then I really didn't want to call it that, but we're now going to commit to it. So it is the week of May 19th, and you will notice that we are in a slightly different place than we have done the last two episodes. Christiana, reporter, editor, whatever we're going to call her, is in town for the INMA event from Brazil, and so we thought we would try out an actual in-person studio. So special thanks to our friends at Morning Brew, Devin Emery and Dan Bauza in particular, for allowing us to use this studio space. So what's the point of the show? Every week we report on what's going on in the media and events industry, and we thought it'd be an interesting opportunity for us to discuss that in more depth on this show. And so why don't we jump right in?
Well, just one thing, the we on AMO Weekly was not a discussion. It was a single person's decision.
Okay, fine. So as the founder, I get to make unilateral decisions.
Yes.
It's a two-way door. We'll change our minds. Again, who knows? We don't have a graphic. As you can see, we just use the AMO logo.
It's a nice logo.
It's a great logo. But when Dan asked us, do you have anything else? I said, nope. He put gray on it, though, so now it's gray rather than white background. Let's jump in.
All right. So you wrote about Axel Springer last week. They have money on the balance sheet now, somewhere between $1 and $2 billion. You kind of are guesstimating there. It's an independent company. It has no debt. So what does it do with that money?
That's a very good question. So Axel Springer basically did a split with KKR and the Canadian Pension Group, with a Canadian Pension Fund, and KKR took Stepstone and the real estate assets. So now Jobs and Real Estate's separate company. Axel Springer owns a minority position in that. But as part of that, Matthias Daffner and Fried, I don't know exactly how to pronounce her first name, Springer now own the majority, if not all, of Axel Springer. I think the grandson of Axel Springer, the namesake, is a tiny holder. And so now they own that outright. No debt, bunch of cash on the books. And I've heard from a couple of sources that the idea is it's between $1 and $2 billion, which a company of that scale, that kind of money makes sense. But Axel Springer has always been a rather acquisitive business, especially over the past, especially since since KKR got involved. But even before that, with the Business Insider deal, they bought Morning Brew, they've bought Politico. So the question now is, with $2 billion on the books, or $1.5 billion on the books, what should you buy? I have three theories as to what they should, or three ideas as to what they should or want to do. The big one is, obviously, they want the Wall Street Journal.
The most unlikely possibility.
The most unlikely possibilities. They want the Wall Street Journal. They tried to buy the Financial Times like a decade ago, and then they lost out at the last minute. I think they were on the runway to fly to go sign contracts, and then Nikkei, who is they're a Japanese business like media conglomerate, like swooped in and bought it.
Wow.
So there's obviously some frustration about that. So the ability to own like a pedigree business publication, we're talking there's like really three main English-speaking ones: Financial Times, Wall Street Journal, and Bloomberg. Bloomberg's not for sale. FT, is recently, has been acquired over the past decade, probably not for sale. And so it's in the Wall Street Journal. And so
it's not just the Wall Street Journal, it's Dow Jones as a whole.
So the question is whether, they would want the full thing, or if they just want that, newspaper, because they are a news company. Axel Springer cares a lot about journalism. It is one of the, only, I guess it's not a true statement. It's one of the few like main news organizations that's run by a former journalist, right? Daffner used to be a reporter and an editor, and then he rose through the ranks and was an editor-in-chief. So, like, he comes from the edit side. So journalism matters a lot. So there is this desire, and it's always been something. Even my time here at Morning Brew, we used to joke like, Daffner would mortgage the entire business to own the Wall Street Journal. The issue is, let's assume that he would have to buy the whole thing, not just the Wall Street Journal. Dow Jones is probably worth like $11.5 billion.
More than that now, right? Because that was from last year?
Yeah, I guess that analysis was from a year and a half ago. So it is worth a lot of money. And for a number of reasons, right? The Wall Street Journal is a great business. Dow Jones has a various B2B components of the business. We talked about this a lot last week. So there's a lot there that really makes that a valuable asset to own. And that is just assuming the cost. If we also factor in the fact, like, why would the Murdoch family even want to sell it. Now, there's arguments to make that at some point, Rupert Murdoch is going to pass away. The trust is going to activate. There's going to be all these different kids who own various voting shares.
And there's already a fight about it, right?
There is, because Murdoch is trying to prevent, he basically wants Lachlan, his oldest son, or I think his oldest son from his second wife. I'm not entirely sure how that org tree works, family tree, whatever. He wants him to be in complete control, but the trust dictates that each of the siblings from that wife all have equal voting. And so there's lawsuits going on, rich people problems, I don't have that. So.
Yet.
Fine, yes. So it's unlikely that Dow Jones is ever going to become for sale. And even if it does, the number of buyers will be egregious because there's just a ton of subscription revenue there, and private equity is going to love that.
So they couldn't afford it if they wanted to, maybe?
I don't really know how. Look, one thing I've learned covering business for a long time, and I mean, you've been at Bloomberg, you can get very creative to find financing,
Yep.
right? And so could they do it? Sure. Axel Springer was a public company at one point, went private, and now it's completely owned by, very few people. So you can get very creative. I just don't see this happening. It just doesn't seem likely.
Right.
So that's the first idea.
The second idea?
The second idea is kind of meta. We're sitting in Morning Brew's office. I believe that Morning Brew is uniquely built as a platform business to really scale up in a way that most B2B companies are not. And so, Morning Brew, both consumer and B2B, and there's a lot they can do on the consumer side, but the area, and in part because of my career here for 3 years, the area that I'm really interested in is that B2B division that has been growing incredibly quickly. And the reason I like it is because a platform business has unified operations, a unified content strategy, a unified sales strategy, and all of that exists here. And so they could easily being, it's very easy from my chair to say easily, they could go out and start acquiring other B2B brands and sort of integrate them into Morning Brew's core B2B business, and it wouldn't change that much from an operational perspective. What's really exciting, though, is that daily newsletter that Morning Brew has, which has, I think, 4.4 million subscribers, that is top-of-funnel marketing to any vertical they launch into, right? And so if they launched if they bought a financial advisory publication, I'm sure there are financial advisors in Morning Brew's top newsletter that they could promote, they could drive down to, that acquired asset and go down the list. Private equity, banking, that all is in that core database. And so what that allows you to do is add immediate audience growth to the publication, making it bigger, more revenue, more EBITDA. The other benefit there, and this just depends on how Axel Springer is thinking about its portfolio, if you buy an asset that's, say, doing $1 million in EBITDA, purely advertising, maybe it trades for 6, 7, 8 times, if you're lucky, EBITDA multiple. And a scale advertising and marketing services business might trade for 10, 11, 12 times EBITDA. And so if you, as Morning Brew, buy an asset for $1 million, that's doing $1 million in EBITDA, but you roll that into a portfolio that is doing 10, 15, 20 million, that $1 million that you bought for 6 might now be worth 10 just because of some arbitrage, multiple arbitrage. Now, I make it sound very simple. All the bankers who are watching, they're going to laugh at me. But that does exist. And there is, bigger businesses tend to carry higher multiples. The risk comes down.
But it doesn't make a splash. It's not sexy and exciting. It's just the incremental growth. It's
incremental because you're talking about $1 billion, $1.5 billion on the balance sheet. And so $6 million here, $10 million there. It's real money, but is it going to meaningfully change the direction of Axel Springer? I don't think so. Doesn't mean they won't do it, right? And we wrote a whole article about this a few months ago about how Axel Springer should absolutely be investing in this business. And I'm not just saying that because we're in their studio. They absolutely should be investing in Morning Brew and giving them more resources. But, I'm not here anymore. They'll figure out what they want to do.
Option 3? Option
3 is they should buy the Washington Post. So it's still a well-known brand, right? It's not as big as the Wall Street Journal. It's not profitable like the Wall Street Journal. But what's interesting here is that there seems to be some political overlap between what the Washington Post's Jeff Bezos is interested in and what the Axel Springer CEO is interested in. And I think that there could be something kind of fun here where Axel Springer has a ton of experience operating news-based companies. They have a ton of understanding about how to, get them to sustainability, kind of grow them. They even have print experience with all their German assets. And so there's an argument to be made that they could come in, I don't know what the exact numbers are, because again, the Post is losing money. And they could come in and actually try to turn that business around in a much more focused way. The problem with trying to be an owner of something that you're not really paying attention to is it starts to struggle. Like the Washington Post was doing great in the first Trump administration because everybody cared about Trump. Well, they didn't make any big investments to help them build a diversified portfolio. So the issue now is they're losing a boatload of money and there's no clear path to turning that around. They're trying to do some things with B2B and, research products, and they're going to try to roll out different versions of subscriptions, but they've lost $100 million last year, I think is the latest number I heard. Mm-hmm. That's a lot to turn around. Now, we had one reader after we published this idea who said, why would Axel Springer buy the Washington Post when they've already got Politico? Which is a very fair point. They paid $1 billion for Politico. The argument for still buying the Washington Post is because Axel Springer is acquisitive, you could see them go out and try to emulate the New York Times' strategy. So Washington Post with core news, could they go out and try to build their own games version? Could they go out and buy other sorts of, lifestyle subscription-like products, right, and build around that? That's what made the New York Times subscription business work. Could they do the same thing with the Washington Post? That's the idea. I don't know if they will. Now, this reader also suggested that maybe Axel Springer should go buy CNN instead. You could make the argument, buy it, have CNN, have a bit more of a centrist TV brand. TV can still make a lot of money. We know this about Fox News. It would be interesting. I just don't know if the value, if the price is right.
Matthias is more of a print guy, though, right?
I think they own some TV assets.
Print, digital, yeah.
He's a journalism guy.
Right.
He came and spoke here once. He's a journalism guy, and so if you can make journalism work, I've chatted with him all of 2 sentences. So, I just think he would love the Wall Street Journal. He absolutely should be investing in Morning Brew, but it's incremental, and then the Washington Post becomes I think is that Goldilocks idea. So we'll see.
All right.
Second story.
Yes.
This is yours. This is you decided to channel me a little bit with this story.
I did. This is not my style.
It's not your style of writing, but you're not at Bloomberg anymore, so you get to have a little fun.
So, I'll be honest. I first reached out to Rare Beauty for this newsletter because my daughter is a huge fan of Rare Beauty. And I thought it would be fun and exciting to, write a story about them. So I didn't really have a clear idea aside from, they're doing a newsletter now, let me write about it. But I wasn't sure what it was going to look like. And it turns out that it's actually a really well thought out newsletter. They're doing unique content. They're doing content that fans care about, that the community cares about. They're literally asking, questions, and the writer, whose name is Mackenzie, goes and reports and finds out, for example, they wanted to know how to make a certain kind of blush. And she went and found out. And they're really valuing that community, which is something that we need to be doing as journalists. So I also noticed at the same time, in the last, 2 months, a whole bunch of other brands have gotten online and joined Substack. But they're all kind of crappy. They're all they're clearly marketing their own products, which, okay, but that's not the purpose of the newsletter. It's not the purpose of Substack, which has a policy saying, this is not a marketing platform. So, the first question was, are we going to see brands become media operators? And I think for the most part, no. But what we also learned from this is that they're nailing it. They're nailing what they're supposed to be doing. And we should, as media operators, be doing something similar. We should be doing really great content, listening to our audience, responding to them. and keeping that engagement going. But it's interesting. Community and engagement has been the basis of Rare Beauty from the beginning. So that just kind of continued into the newsletter.
So there's always been this discussion about like, is everybody a media company or is everything a media company? It pops up every few years. A few years ago, HubSpot bought The Hustle, which gave them a big media asset, and then they rolled out their podcast network. They're a software company with media. You've got, Rare Beauty, which now has its newsletter. MailChimp years ago bought, I think a magazine. So there have always been these attempts to take media like growth strategies and apply it to a retail business. The thing I've always struggled with this is there's two things. One, for most of them that you've referenced that are on Substack, they're really bad, right? In the article you listed, like one was about like perky butts and then they pointed to like a pair of jeans. And one was like, there's just like a lot of really meh kind of content.
Yeah.
To do good media, like you need to create good content. And I think a lot of these retailers get really obsessed with like the immediate conversion of like, but is it driving sales? Is it driving sales? It is very hard to get somebody, like to get an executive team excited about a non-conversion based marketing exercise. We live in this era of conversion marketing being the most important thing. Brand marketing has been going like as a function has died quite a bit. So now it's like, how do you convince an executive team that they should be investing in content? And so every few years we get this idea, everybody's a media company. And the outcome is very few retailers do it. They give up on it. And it's left to us to do it.
This is interesting because I did ask the question about how they were convinced, the executive team to invest in this. And I mean, it's not a huge investment. It is an investment in time, and Mackenzie has other responsibilities. But she said, they're willing to experiment. They're not looking for an immediate return. It's an investment in their community. So they're doing it the right way.
Yeah, and they're doing it in a very connected way with the audience by focusing primarily on user questions. That is what builds a brand. Like that is how AMO built its brand. I put newsletters out, people respond, and you start to develop this sort of parasocial relationship with your reader. A similar thing can happen here where these readers are going to feel a connection to this newsletter. They're going to feel a tight connection. And when, new products are rolled out or if there are ever events held around, launching new products, people are going to be excited. That is what any retailer is going to want.
Yep.
It's just, it takes time. And so long as they have that time to figure that out, they will be fine. It's just, it becomes a challenge when it doesn't work immediately. It takes real buy-in there. Now, I do think the important thing, there are two other things to learn from this that I think are relevant. One, Substack as a distribution engine is starting to become interesting. So retailers obviously are going to play there, and a lot of them will get banned because they're just doing marketing. But the other opportunities for publishers themselves to be publishing content on Substack. So AMO used to be on Substack. We left, and one of the reasons that we stopped publishing there is they were driving no subscribers. Every subscriber we got was from my marketing, and so why would I build on a platform, give 10% of revenue to them? Well, fast forward to now, they actually drive subscribers. They have their own sort of like recommendation engine or whatever. And so there's an argument to be made that more publishers should be distributing some of their content on Substack. Don't charge, do it for free, but distribute some of your content because that audience has a higher proclivity to pay. And so like if I take AMO as an example, if we sent one AMO article a week on Substack, but then we also link to all the other articles that we published, they may come over and actually subscribe and pay.
But is that a third newsletter?
I think it's the same newsletter, just a little bit longer form. So, we have Jacob's Corner in the newsletter. We could stretch that out to be more, or we could take one of the articles that we publish on AMO and publish it on the newsletter. Whatever the case, like whatever that is, it would be a way to get the Substack engine growing that newsletter and drive that to AMO's website. Don't know if it'll work. I know New York Mag is trying it. I think some others are also experimenting with it. But there is a proclivity to pay on Substack. And for subscription businesses, getting in front of that sort of subscription-friendly audience is powerful.
Fair enough.
So anyway, we'll see what happens with Rare Beauty. It's a cool idea. What I loved most about it is you wrote like I do. It's conversational. It wasn't all tough and strict Bloomberg style. So we're beating down your years of journalism experience. Before you know, the Oxford comma's coming back.
No.
Take us to the third story.
No Oxford comma. All right. Evergreen. Evergreen was really good to Investopedia.
Yes, it was.
It's fantastic. I understand the block where I used to work is now moved more towards doing evergreen content as well as educational training kind of stuff. But I don't think I don't think we need to do evergreen content anymore. We have AI. The sources are out there. I just don't see any reason for taking the time to report, research, and write an evergreen article. What do you think?
So I was texting with another AMO reader today about this because we put this in Jacob's Corner, and Jacob's Corner being my part of the newsletter. It's a very egotistical name of the newsletter. So I think we have to break evergreen content down a little bit more to sort of properly define this. So we've all seen the articles where there's 150 different websites that'll tell you how to boil an egg. We don't need that many pieces of content about that. But with Google search, it was an easy strategy. Write a bunch of these really crappy articles, get them up on there. Hopefully people will click over. You'll make money on ads. That is very undifferentiated content. We don't need that content anymore. So I completely agree with you. We do not need that content. But there are certain types of evergreen content that are very relevant to our audience. For example, we have written in the past about how to build for AMO specifically, how to build a multi-touch lead gen campaign, right? Where a user clicks on an ad in the newsletter, they get automatically added to a segment. That segment gets an email sent to them promoting a webinar. If they attend the webinar, they then get sent another email to download a white paper. That becomes a very hot lead for that sponsor. It's a very how-to, A, then B, then C, then D. That is evergreen content. It's not different today. It was not different a year ago, and it won't be different a year from now. But it is.
Oh, I don't know about that. Technology changes, things change.
Yeah, there might be subtle changes, there's a new, content type perhaps. But we've in B2B have been doing webinars for 10 plus years. We've been doing white papers for 10 plus years. We've been publishing articles for even longer. We've been doing email newsletters for a long time. The core products haven't really changed. And so that is a piece of evergreen content that would benefit an AMO audience.
But we've written it as a story already.
Right. So that's one example. So why wouldn't we do another thing like that? Something like how do you build a multi-step, retention program to keep subscribers from churning?
Because it's not news, and I do news.
You do news, but we have to think about what is the type of content that is important to an AMO audience to ensure they can make better decisions in their jobs.
The other argument against it is that you can charge consulting fees and teach them this.
Sure, but the best way to show that you're smart enough to do that is to have that content. So I think as a publisher, most publishers don't launch consulting businesses. I think for publishers, it is important for them to differentiate between or to separate the type of content that they're potentially going to do. A undifferentiated story is never going to be good because AI will tell you how to boil an egg 10 times out of 10. A differentiated story, something specific to your audience, I think is very valuable because even if AI can do something about it, the specificity required, I have not seen AI be able to get that specific. Plus, there are still some trust issues. But then there's the one step farther, which is more and more publishers are rolling out their own LLMs on their own websites. AMO has Ask AMO, right? Which is a little search thing up top powered by Direct that if you click it, you can ask a question and it will give you an answer. And then it will give you,
It's not always that great.
That's because we don't have enough content yet, right? LLMs require, more content. And since this LLM is only learning on our content, there's only so much it can do. So but I asked it today, and, when I was talking to some folks, I said, who is Craig Fuller, right? And it gave me a one paragraph about Craig Fuller, founder of FreightWaves. He's been buying up a lot of brands, probably some other points. But then it also listed every article that we referenced Craig Fuller. And so if you came to AMO and asked, like, how can I monetize with lead gen? It might say you can build a multi-step lead gen program where you kind of connect email and click behavior to this and this and this. That's powered from the Evergreen content. And if more publishers are going to roll that sort of stuff out, these LLMs, having that differentiated, truly unique content is very powerful.
I wouldn't call it evergreen. I'd call it like the expert's corner, Jacob's corner.
Sure, but at the end of the day, like a news article, its shelf life is not that long, right? Like, you know, if company A buys company B, that news article lives for that period of time.
Yep.
And then like the story changes from the deal happened to what's coming next. That has a ton of value. And, you know, scoops-based news is a huge driver of subscriptions for a number of brands. But I do think that there's still a world where the right type of evergreen makes sense. Now, whether I assign that to you and Braun, I guess remains to be seen.
All right. I'm slightly convinced.
All right. Well, that is all the time we have for today. Thank you so much to everyone who listened to this third episode of AMO Weekly. We will not be in this studio next week because Christiana has refused to move to New York. And so we'll be back to doing it remote. But again, to the Morning Brew team, thank you so much for letting us use your studio. It's so cool to be on this side of the camera in this room rather than watching it on YouTube. If you are on YouTube, be sure to hit subscribe, like us, leave a comment, tell us what you think. If you have thoughts, you can email me, Jacob at a media operator, or cs at amediaoperator.com.
Now you got it
right this time. And we will see you all next week. Have a great day.
Thanks.